Okay. Sorry. Should be able to hear me loud and clear now. I just set it on mute. So I'll just get myself organised as I play around. So generally the first for this hour stream, I'll just give a minute or so for everyone to come in and then start the chat as we go. So hope we're well, Jane. Hope we're well, Nifty. Everyone, I'm hoping had a good weekend. Good. Fantastic. Come on, you go there. All right, so just watching this bit of a breakdown. We had a breakdown in the Hang Seng, which spewing I didn't trade. That was right at 12:20 when I was getting organised for this stream. So what I was looking for is a bit of a breakdown on that from the open, and we got it. Didn't trade it, so I would have been trading through 15. So that was the entry. I'll show you. If everyone's happy to talk through, actually, let me get started, and then we'll talk through this trade, the idea behind it, and then just was watching that SPY for a breakdown as well. But again, didn't jump on board that. You can see that was consolidation just below that high, and it was a bit stretched into that level. So expecting a bit of weakness, especially the Hang Seng, if the Hang Seng was to break down, which it did. So welcome to Trade Setup, everyone. Hope we all had a great weekend and managed to unwind. I know I did. A bit of a relaxing weekend, which was nice. Got the kids out on Saturday out to the park. We did a bit of a walk around the lake there, which is always really nice down here. And then yesterday I took them out on the bikes and had a bit of a jog with them, which I haven't done for a very long time, probably about a month or so. And I tell you what, it really did hurt a bit. But you've got to do what you've got to do. Keep that body ticking over. Keep the movement going. So yeah, it's a good weekend. Had a bit of a session just yesterday afternoon too, before we went out, just going through charts and bits and pieces. I'm not sure if everyone does that, just to go through any setups that have played out okay, whether you trade them okay or whether you didn't trade them okay, whether you're on the right track, all that sort of stuff. It's always a good opportunity, I think, to sit down when you got some quiet time, just to break everything down and see how it played out. So I mean, the reasoning why I did that, I'll show you exactly why. This was the Friday afternoon. I was expecting weakness in here and traded it in and out all the way down. In all, I only made a few points on that, and you can see the move down was quite big. So what I wanted to do on the weekend was just really break it down, what I was expecting and why, butchered the entries a bit, because butchering the entries means that you're not taking out as much as you can. And I think because of my entries, it had tight risk. It got tagged a few times, so it really wasn't the best session. And I always like to sit down and just, Jason, just sit down and go through everything and write some notes on the charts. Why, what I could have done better, what did I do good? I mean, all in all, picked it really nicely. I moved down on those highs, but really the execution lacked a bit. So it's always good just to go through everything there. Just 1 second there, guys. There we go. So yeah, that was my weekend. So it's always good fun to do. No problem, Jay. Look, it happens. I mean, that's the thing. Some days everything just goes so smoothly to plan. Some days, and even on the Dow, I think it was a Dow on the same session. Where was it? It was in here. I think sent out for a buy recommendation, and it actually did go exactly what we thought. But in the meantime, just for some reason, I was off the boil a bit on Friday, off the boil, and got got down on that open on the break, come down and stopped out, and then boom, straight to target, which is yeah, it's frustrating, but you can't do much about that, and that's why it's good just to go, okay. I mean, I always do it, and it always helps me, helps with the trading a lot, and it's good to go back on everything to yeah. So sorry, just reading a couple of notes here. So yeah, it's good to go back on everything, and that's what I find a very good thing to help your trading. And it also say you get times when nothing's going to plan. What I like to do is go back on old trades, old sessions, anything. Still no sound at this end. Maybe, sorry, Pete. If everyone else can hear me, I'll just try logging out and in again, Pete. Sure, everyone's. I am coming through clear, aren't I? Yep, sound looks good. Okay, so just on your side, unfortunately, Pete. All right, so yeah, I really like to do that, and I like to take. So what I'll do is take notes of, take a snapshot, write what I was thinking, basically take some notes on it, mark up the prime entries. Now, did I trade those prime entries, or did I just leave them? Especially on the Hang Seng, it's good because it can move really fast, and if you're not in the right place, sometimes you can get a bit choppy. And you can see on this move down, there's a couple of good green candles there, which it got a bit whippy, and I think two times or twice I did get stopped out on those whips back, and that's because my entry wasn't great. Okay, it wasn't really good. It wasn't in the prime area anyway. So, um, take it on the chin, move on, because it's going to happen other days where your entry is going to be beautiful. I mean, look at this one. So what I was looking at today was to be bearish. Essentially, I was bearish. I'm bearish from the longer term 30-minute chart on the Hang Seng. All right, you can see that sort of grind up, and if you look at, let's just go to the 30-minute and talk through it. So I think it's a good look. It's good to just go through things like this and break down. It's always, I know it's in hindsight talking about it, but it's always it's very useful just to get your mind. And what it does, if you go back and look on different charts when you were trading good or even when you were trading bad, a lot of the times it stands out. Like if you've really progressed, you'll see it quite a bit. I mean, I can look back at old charts from years ago on the SPY essentially, and I was chopping around willy-nilly, in and out like a yo-yo. So you can see, and I could see exactly why I was getting in. I knew why I was getting in because I got my notes there, and I could see now that my style of trading, I would not do that. And when you were trading good, if you're having a bad run, like I said, you go back and look at the old charts, some of the old executions, and you go, well, that's maybe I'm not doing that anymore. Maybe I should be refining that again, or going back to the basics and not starting from scratch, but it's always good just to go back and go, what am I, there is going to be times when you veer off from your plan or you veer off from your strategy, whether, you're having a good run and you get cocky, then you start getting hit and it turns you, just gets you negative on the market and you're trading. All that sort of stuff can really happen. And it's a great way to refine it. Yeah. Look, no, I completely agree with you there. And there's going to be times when it's just not working, so it's good to just jump on the sim to get that emotion out of your trading and to make sure that your executions are good. Because there's going to be times when you perfect entry, absolute cracker, and you get stopped out. I mean, it just can't happen. I can't. It just can't be helped. It's all about your statistics when you're trading. If you're trading 20, I used to take, I still do every now and then, take your 20 trades, mark them up, take your statistics, and as long as you get one or two of those trades that are going in your favor, I'm pretty much stock standard around the 60% mark. On the right side, 60 wins, 40%. Well, was it 12 wins out of 20 and eight losses out of 20? Generally, that's my standard statistics for my trading, and it has been for quite a while now. But it's good just to go back and say, oh, look, I butchered that exit. I might have only made 20 points on that, or not even 1-to-1 when that went off, and there was no reason to get out, and it kicked on for another 100 points, and that was the one out of the 20 that really puts you over truly into profitable territory. So it's good just going. It's good just to go through everything, your executions, and you go, are you sticking to your plan? Are you veering from it too much? And it's good just to a bit of a positive reinforcement that, yeah, I can do this. That's fine. I know what I'm doing. I'm just going to stick with that, and I know I'll come good again. There's going to be times when you do nothing wrong and you can't get anything right, if that makes sense. So anyway, we'll go back to just, rather than veering off, this is a 30-minute chart. So you can see that The momentum's been down. This is a longer term 50, 150 MA. I think it's a weighted moving average. I've started changing from exponentials to weighted. I kind of like this, and these two are the whole moving average. I think it's a 20, 30 and a 50, these two. So the yellow one's the key one that I'm watching. All right, and as long as I'm sticking sort of that plan, I'm getting the basic flow of the market, and then my entries, really refining my entries on my price action. So these here, you can see the weight was down. We've got a bit of a pop-up. I didn't quite expect it to open up so strong, but the way it opened up and then hovering around that level, you know that there's going to be buyers jumping in, thinking everything's working out. Let's go. They're going back up to 25,090, but when it starts to hold, it's a bit of a trap, trapping in some buyers and squeezing them back out. So if we jump down to the 5-minute, knowing that we're biased down on the 30, I mean, this thing could really sell off. So if this holds roughly here, below roughly where we are now, was it 24,810, 820? If we hold below there and start to chop around here, this could sell off down through 24,8585. Whether it's today or, not, I wouldn't expect it in this session before 2 o'clock Sydney time, closes from 2 to 3. It could be later on, and we might get a decent sell off, coming to the US session. We'll just see. That's going to be following the down everything there as well, the European session. So over to the 5. We've got the 5-minute here. So the 5-minute, you can see, okay, we floundered here. Now, if that was strong and really bullish, it should have kicked on, and it tried a few times. And you can see, green candle here, backed off, tried to go through the highs, failed miserably, took out the lows, took out the highs, swept through the lows. So there was really some weight coming in. Every time it popped up, it was getting knocked back down. So if you're watching that, thinking, okay, at that stage, I mean, it's the same. You could say the bulls could win, the bears could win. That's fine. All right. So either way, as it's starting to take out, we've got. Let me just mark it up. That low there suggests. No, that's not what I wanted. That low is suggesting. No, it's not really working either, is it? How can I do this? That low is suggesting that we've got push through these lows. Okay, bears are winning after washout, and it turns around and rallies straight through the highs here. So what that's done is just taken out those bears that got short, down through here. So it's washing out both sides of the market until it starts to settle down, and then what you can see is another flush down, took out these lows with this candle. But then what it started doing, this is important, we started holding that lower high, all right? As soon as you start holding that lower high, you know that, okay, we're starting to get weight on one side of the market, whether it's bearish or bullish. And at this stage, it's starting to look a bit more bearish. Now, that could have been, the way I'm looking at it, it could have been a short through there. But what I'd like to see is it hold below the MAs. I'd rather see that lower high come in below this 50 whole moving average, and it's starting to roll over. And that's, to me, starting to show that, okay, that 30-minute chart is starting to play out. We might get some more weight in there. That could have been in hindsight, it worked out okay, but you can see the powerful move come later on. Once we started holding here, that was the entry at 15, I think it was. 15, just below that low. Entry at 15, you might have a stop just below this red candle here at around 60, 50, 60, thereabouts. I mean, it's quite a wide stop, but that Hang Seng can really get a move on. And the target was down to this 715 here. And it actually traded straight through it. There was a 100-point gain on that. And if you didn't take a partial on the way down, or if your target got hit and that was it, what I wouldn't mind doing too is seeing, because you never know with the Hang Seng, it could really kick on. Good on you, Pete. Nice work, mate. You're going to have to go listen to what we're talking about just at the start. So you could really see that if you're, I like to move my stops. So if I'm trading off this 5, I want to stick to the 5. I don't mind going down to the 1 just to try to refine things, but I'd like to move my stops below that the 5-minute chart. So you can see that, okay, here it expanded lower. We got that flush lower. We've got our target. I mean, if you didn't take a partial off there, if you took a partial earlier and you're riding the second half, you want to see how far it can go. The stop moves down, and you would have got triggered straight away. Because I like to see that close of the candle. My stop's going to go just below it. Sorry, just above that, the high of that candle, and then it's, you basically got stopped out. Hopefully, if that turned out as a red candle, you can see that could have extended further and further and further down. Okay, but either way, I mean, it's a good little trade that kicked off, and when we start to, at the moment, we're starting to bounce back up again. So it'd be interesting to see whether we can, do what we said on the 30, hold, and then see new lows. Now the SPY, what's the SPY doing? SPY's popped back up as well, so it all seems to be, well, look, that's probably why. There you go. the old Dow can't help itself. Has to be bullish at this time of day every day. Coming to the US session, so it's nice. Now, we had an entry for anyone that hasn't been following, just looking at it from TradingView. We've got Bitcoin long from 950, and the only reason we didn't get long lower is because I was looking for this. This could have been a nice entry, and we discussed this on a stream, I think, a while ago. It could have been a nice little entry through this high, knowing that, okay, it is aggressive, but the good thing is when you got aggressive entries, they pay out better. I mean, and a lot of the times you can get lower risk on them too. You might get less hits, as in your strike rate on, say, something like this, on a break through that high there, if we can just mark that up, break through that level with your stop below, you can see that what you're doing is minimizing your risk a lot more than, say, we had it at 95 entry. That 95 was way up here and the stop was way below. So you can see that you can really refine your entry, which is great, and you can refine your risk. You're going to get tagged a lot more on those. So you might get stopped in and then stop straight back out again a lot more when the longer term structure is still well and truly in place. So they can do that, but when they work out well, your risk reward, your return is a lot better. Okay, so that was something we were looking at and didn't get onto that, unfortunately. And there was another chance up here through these highs just prior, but we were pretty much at the same level anyway, 95. So at this stage, we've locked away some gains. It's just powering on through 10,000. It'd be interesting to see. I do think there's more left in this. I wouldn't mind seeing a pullback to consolidate, the move up. But it is getting a bit stretched. You can see this is on the 30-minute chart. It's stretched on the 30, it's stretched on the 4-hourly, and it's looking a bit stretched on the daily as well. So I don't mind. I mean, if it does pull back and then some of that heat comes out, if it comes out of the action, but you're holding near the highs, or you're consolidating near the highs, great. I think it's got a lot more to go in it. But either way, we're in at 95. Remaining risk is at 96. Book some at 94.40, 99.40. It's a free trade for now. We'll just see where it goes to. So that's pretty much it, guys. I think I'll have a look at. Just want to go over where the markets are, and then what we'll do is get into anything that you want to put up. Probably next in about 10 minutes. So whack it into the chat if there's a code, if there's something you want to look at. Is it Eric? I'll go through. What I'll do, I'll go through the Ethereum in a minute as well. I'll get it up on the TradingView chart. We've just done Bitcoin, so we'll have a look at Ethereum. Ethereum is, well, let's look at it now. It's really kicked on nicely too. Look at that. That's a 4-hourly chart. So that, that come with a breakthrough, was it 252? So you could have had a nice breakthrough 252, knowing that, let me just go back. You can see that what we're marking up here is the contraction. So contraction when buyers are coming in and sellers are coming to that point of agreement, you know that it's not going to sit there forever. Generally, the market doesn't want to just sit there and do nothing, go sideways once they come to a point of agreement. It's going to start breaking because people have bought it and people have sold it down to that level. So they're selling down. You get lower highs, but they're also getting, buyers are soaking it up with high lows. I don't know if you can see my hands moving, but I'm articulating it with my hands as well. So you can see these lower highs pressuring in. So sellers are jumping in, whether it's longer term or short term here. The longer term buyers are buying it up here. That's coming to that point of agreement, and bang, it's going to take out one way or the other. And there's going to be a lot of emphasis in that move, a lot of momentum in that move once it starts kicking off. Once the move becomes a lot clearer, and you can see it resolved itself to the upside here. It's really kicked on strong. So if we go to the daily, I think Ethereum, you can see it's just breaking out. It's going to be targeting 367. I think in the near term, it's just taking out this high at 280, 290, for instance, just to get this high. Now, if it could really get a move on, the next levels up would be around 490, and then you're looking up to 817 and so on, right up to this high over the longer term. But I think as it's going up, it's going to have your pullback. So if we can get a pullback to buy into, and the market's looking really strong, it's extended here at the moment, so you need a bit of heat to come out of that. If we can pull back, hold this high low somewhere around maybe this level here, around 2, you come back to retest, just in here. If we can come back to retest that, we might get high, we might get low. If we just come back here, come on, I want that. Come back to retest, see if we can get the entry and a long position, and I think that could really start plowing. If it hasn't taken out this high, it will. It will take out that high at 359. Now, if we take out that 359 level, we come all the way back down to test here. It's going to clean out a few buys, but it's still going to be a strong move up, and it's going to consolidate and see if we can sit on top of the MAs and go again. So that's what we'll be looking at in Ethereum. Let's go to the US just to see where they're at. Now the US has backed off on the S&P. It had a bit of a flat end to the week, down slightly. Now, it's nothing too serious. This is the daily charts we go through, but I mean that trend is still up. We're still holding this inside level. On this is a big S&P at 31.35, and we're still approaching all-time highs again. So it'd be amazing if we get into all-time highs. It'd just be considering what's going on. When we're back here, we seemingly had no problems whatsoever. Okay, since this level, there's been massive unemployment. There's been, the US dollar's been it's been smashed, so that's going to help in exports. But the US dollar is becoming a waste of time. It's getting knocked around. Corporations, there's a lot that are going into not liquidation, administration, bankruptcy. I think there's been quite a few that have been filed for bankruptcy since that level. What else? Unemployment, like I said, unemployment's gone nuts. It's just, there's too many factors that I don't understand why we get up there. I guess it's just one of those things. There's nowhere else to, when the bull market's going and it's getting held up by basically Amazon, your tech stocks. So that's why you've got to focus more on the NASDAQ. It's getting held up by a couple of stocks in the S&P. A lot of them are really copying it, but the overall index, if you're just following the indices, they're still heading higher. So they haven't broken anything just yet. Now on the NASDAQ, it's not so much here. I think it's more this kind of level. You can see it's respecting that for a while now. It's touched on here, so that it's the start of the trend up, and it's been kind of channeling up for a while now. If we do this and just take it there, we popped out to the top side of that channel a bit. We've got a lower high in play now, but we're still holding that trend up. Okay, so it's not just because we've had a couple of down days and it's come off these highs doesn't mean we're not going to hold and go again. It could mean that it's just some heat coming out up at the highs. We may consolidate. We may have a deep correction of here and consolidate and go again. But what I'd prefer to see is, I'm on the daily now. I prefer to see, a break lower, and then your first retracement. What happens on the first retracement is going to be shallow, and then we start to get some heat from there. That, to me, would suggest that we're going to get a decent sell-off. But if we start to go up from here, then it's not really a deep correction, and it really hasn't broken that trend up. And we could just keep grinding away back up to the top end of the channel again, and we're into new highs again on the NASDAQ. The S&P is probably hitting new all-time highs and so on, and the Dow along with it. So the US dollar a while ago was a safe haven. We dived into safe haven. Now they've devalued the hell out of it with stimulus. They've just been lobbying the stimulus, and so I think when you're talking about as the global flow of money moves around the globe, basically, everyone's looking for yield. You're going from one market to the other. The US is really, I think there's a bit of a move out of the US longer term, or it hasn't got as much interest as, say, Europe. I think there's been a lot of talk now. Europe is doing well, so there's flow from US dollars to Europe, the euro, and if you're in there, you're going to be buying their stocks, because I think there's a lot of talk of them coming out and looking a lot better, whereas the US has got that many cases continuing to increase, and that is eventually going to put pressure on their economy and economic numbers and getting back to the norm, I guess, or a recovery. Whereas Europe is doing a lot better. They've done better with their lockdown. They're doing better with their numbers. So if there's going to be a place for major funds to flow into, it could be into Europe at the moment, and to start supporting their companies. And as Europe comes out of lockdown better, or comes out of economic recovery, recovers better or quicker. So we'll see how we go. but yeah, that's why the US dollar is copying it a bit as well. Now we talked a lot about gold and US gold. I mean, there's still, I think it's everyone. I just had a pop up from Bloomberg. Gold surges to a record, so it's got some momentum behind it, but I don't think it's based on a well, let's look at the chart. I don't think it's based on safe haven into gold. I'm more inclined it's just US dollar based. I mean, as the US dollar heads south, anything denominated in US dollars is going up. You can't help it. Aussie's the only one, well, not the only one, but the only one I look at that's not doing so well. The euro is doing well. Every time the US dollar's down, the euro's up. Pretty much even. Matches, it's not dollar for dollar, but a percentage move up is correlated to a percentage move down. Whereas the Aussies, a lot of it's correlated to um, risk on currency. So it's correlated a lot to what the indices is doing too. So they run out of steam a bit, and you can see the Aussie was backing off Friday. It was selling off because the indices were selling off, the Hang Seng was selling off, the Dow was selling off, our market was copying under and a bit of pressure as well. So the Aussie was coming down. But it's luckily enough later on that it was supported by a sell-off in the US dollar. Okay, so it's always going to be a benefit. If the US dollar is the one moving, anything denominated in that currency is going to move, be supported. But if there's added pressure, so essentially the Aussie dollar just bounced around off support a few times, whereas the euro went higher, the pound went higher. So yeah, that US dollar is really, all that stimulus is really pressuring it, isn't it? Of course I get sidetracked. This is the NASDAQ, yep, so we're talking about that. Gold, let's just talk about that. It is powering on. Now, you've got to go to a weekly chart, and it's right up at these highs now. Whether I'm bearish or not is irrelevant. I think if you're long, and you got to think, who would be buying it up there in their right mind into new highs, buying it on stop there? If you're basing it off basically any chart at the moment, that weekly chart is stretched. You can see momentum is really high. I mean, that's momentum is up. It's stretched. So any stochastic, anything sort of momentum based momentum's heading in one way. But I've got to, looking at that, I wouldn't buy that. I wouldn't go anywhere near it on the long side. I'd be more inclined to see if I can get a short off on gold, purely because you're going to come to a level where you'd expect that's going to get flushed out this high. And they've been targeting that for quite a while, I think, with that sell-off in the US dollar. Now, of course, if the US dollar goes further into meltdown mode, there's going to be some support, continued support in the gold because it is denominated in US dollars. But I think it's a key level. The fact that we're stretched into that level, it's a key level, it's a key high. It's going to wash it out. It'd be interesting to see if there is going to be some profit taking, because it has been bought up quite well, quite strongly, and not really based on any sort of safe haven, because there's times when the US dollar, Dow and S&P was really moving along strong, and gold was still going up because the US dollar was actually going down. So if the US dollar bounces off these lows, then I'd expect there to be some profit taken into gold because it's really stretched. I mean, if we go into a daily chart, that's, in my eyes, it's stretched, so I wouldn't go long that. I mean, if you're going to go long that, where are you going to put your stop? I mean, I like to put my stops below higher lows because I want to be proven wrong. So if I'm going to buy, here for instance, I'll be buying that. So we box it up, buying the break of that high. Let me just do something here. Just want to change that a bit. Why isn't that working? All right, something's weird here. Oh, here we go. So make it a bit lighter. So if we box it up, I was talking about, I want to be proven wrong. So if I'm going to take that as a trade, for instance, this is basically how I structure my trades anyway. If I'm going to take that on the break of the high, the only way to be proven wrong is a break of that low after you get that. So if we get the market popping out the high and it falls back in within that range, and then starts to trade down below, takes out this low, then I know I'm wrong. I've got it wrong somehow. Whereas if you're buying here and you've got it just below this, if you're buying it based on that daily chart, you might buy it on an intraday chart. You might be right then on a 5 minute. So that's a different ball game altogether. But if we're buying off this 1 hour chart, daily chart, to buy up here, I think is nuts, because I don't know where you're going to put your low. You're going to have to put it right down at 1787, for instance. Now, you're just not going to do that. So, I mean, there will be people buying potentially here and might hold their stop here, just below that low, that candle low. To me, that's, you're buying in an extended market. Everyone knows what's going on. I mean, no one can sit there and say gold's not bullish at the moment. So it's you're buying into the known. You're not buying into the unknown. Whereas something like here, you're buying into the unknown. We've had this sell off here. We had this bounce. It's pulled back, sat on top of the MAs, and it's going again. And then it's consolidated and it's gone again. So when you're buying in the unknown, the payouts are better. The probability is higher, as long as you're getting the price action right and the structure right. And then when it becomes more of the known, so when it was trading up here and started to break out at this stage, I mean, it took a while, but started to break out at that stage, what was happening is more of the known, as in everyone knew that we're starting to go higher, we're into new highs, we're taking out key levels, all that sort of stuff, but you bought in way back here, okay? But if you're going to be proven wrong, you're only proven wrong when we take out those lows. So that's making sense. So I always like to, I mean, even in here, say for instance, you took it out, a break of that high, you got your stop below the higher low, because if you do get in on a breakthrough and it comes back down, you've got something wrong. Your analysis is wrong and you're probably caught in the chop. So you're better off being out and reassessing. The same here, any sort of thing. That's the way I would like to structure my trades. I don't like to structure it where, say I bought that break there, for instance, and I got my stop below that candle. It could easily take out that low and turn around and go. And I'm completely right on my analysis, but I just traded it wrong. All right, so I didn't give the move a chance to play out. So anyway, I got a bit sidetracked there. So either what I'm saying is that gold looks stretched to me, and I wouldn't be surprised if we do get some sort of profit taking through these highs, because you've got to, like I said, you've got to ask yourself, who's buying it up here? I wouldn't suggest there's any, I'd suggest it's sort of retail breakout traders buying it up here. People are looking for that move to continue. They've been taught and told that it's going to 2,000. The move's going a lot higher because the US dollar's melting down now. It wouldn't take much for the US dollar to bounce and everyone to get squeezed out of gold. Right? It could be a good flush lower, and it could flush lower, take out, come back down and retest down to this zone at 1780. It's $100 drop, and then turn around and keep going. But I would much rather, if I was going to buy here, to see some sort of flush lower and see it start to hold. If we get this action and it starts to hold off a higher low, I'm happy to buy that. I know exactly where my risk is, because it's below this high low, and I'm going to see if it breaks into new highs, and that's fine with me. But at the moment, I wouldn't be buying here. I just don't see anywhere to place my lows. That's why I'm thinking up at these highs as a prime level to wash out those highs, get everyone excited. All your retail, your mums and dads will be looking at that breakthrough into new highs, going, that's great, we're on. I've missed out on this move up, I'm jumping in, and then they turn around and get squeezed out and move down as we get some profit taking and a big squeeze lower. Could be completely wrong, but we'll see. Let's look at the US dollar then. US dollar is, look at that, it's still sinking, and that could extend a bit further. But what I'm looking at in the US dollar, if we go back to the weekly as well, that could still move lower, and we might find some, if we take it sort of in here, we bought off that level before. The market's pushed up, pulled back to here, pushed up, retested it, come back into that zone here, and it's back into the zone now, sort of the lower end of that zone. Now, if it doesn't hold up here, we're probably going to head, it'll be interesting to see we do spike lower and then reject it fairly quickly, or what's going to happen. But if it starts to, again, that move down is not in the unknown, it's in the known. So the more of the unknown would be if we start to hold up and we start to put the squeeze on any of these sellers that are built up. Right, so it wouldn't take much for that to bounce and squeeze out any sellers, and then you're going to get a big change in the euro. There's a lot of things that are linked to that US dollar that could turn pretty quickly. Yeah, well, any questions there, guys? I think I'm jabbering a bit. We've got copper. Now, copper, I'm on the weekly here. Copper is extended on these highs. We've been watching this action for a while. Now, what I'm watching on copper is maybe a bit of a near-term sell-off. You can see that's the trend we've been following. It's been holding. until we got this retest of these highs, and it failed again, just as an inside level. You can see the inside level being just through here, failed at that level there, and then we got that lower high. We were looking at that. If that turns out to be a lower high and it holds, we're going to get that sell off, and it looks like it's just broken down out of this longer term uptrend. So what you could probably expect for that is there's a lot of buyers been building up, and if you get more tensions between the US, the US and China, if that starts increasing more, China's a major importer of, well, I think the biggest, of copper. So are they going to hold off? Is that going to affect their importing? Is that going to affect demand? And I think anyone that's been loaded long is going to start to question this. And to be on the safe side, they might just start to close out. All right, which so there's a lot of fuel on the long side that could easily get squeezed out and move down. So if we start to, I mean, this might even be a trade. You start to get through this low at 286, say 286 even, your stock can be above and see if you can ride that down and see if that momentum to the downside starts picking up a bit. Picking up, I mean, starts accelerating because you get these longs that start to get squeezed out of the action. But it looks like we could be, this was just a minor corrective price action off those highs. We could be going into some more serious longer term corrective price action lower. All right, but we'll see how that goes. And oil is, it's just corrected. We've had that little spurt higher through the highs at 41.60. It's just edging lower now, but crude looks a bit better to me. If we just take it across these lows, you can see, even probably in here, I can move that back. It's been supported a bit better. But it doesn't take much to crude to move. It can really pick up. So if we start to break through this lows, you might think that these longer term buyers might have to think twice about their position and might get squeezed out on the way down. All right. So that's pretty much the major markets I'm looking at the moment. Whether or not we get Nasdaq's the key for, I think, the indices at this stage. We've got copper showing some signs of weakness, crude potentially showing some signs of weakness if we go through those lows. There's a few markets, but we've been here before. We've come back down to support. We've shown signs of weakness and rallied. So just be wary if you're going to load in short. We're still at this stage. We're still long. We've got only 3 stock positions. We just got stopped out of one today, and we've got a Bitcoin, and we've got quite a few still some shares on the radar, but they've got to set up first. So if they show signs of setup, then we're obliged to jump in. So let's go over to some of these. We've got EML. Anything else you want to look at, whack it in the chat, and we'll go from there. So BKW was, look at that. You go to the 1 minute chart, stopped at 16.10, got the 16.08, 2 cents stop out, and then bang, straight back again. I still don't like this. I mean, I don't like getting stopped out on the low for the day when we could have got a much better, So if you do have shares and you didn't get stopped out, I mean, it's up to you whether you want to continue to follow it. My bias is still that it's not looking that crash hot. That it's grinding high. I don't like this action where you get a good acceleration and it starts to break up. It could very well get back up through 17. That's fine, but it's not convincing price action on the upside. And we're getting a bit stretched. There's no volume coming through on these rallies as much. The volume's starting to ease off. So if we're easing off as we're rallying, it's not a really good sign. Buys keep giving a nudge high. It was extended on the stochastics. So if we've got some selling coming and it starts to take out, if we start attacking back through 16, I'll be really bearish on this one for now. I wouldn't sell it short, but I want to be selling it off a shoulder. But I don't really want to be, I'm happy to be out even if we could have got a better price than 16.10. Could have taken a small gain on that today. So be it. That's the nature of the beast. So what have we got? Email. Let's get into it. Give me 1 minute. I just want to see whether these markets are. Okay, so there's still a bit of weakness coming in. Hang Seng's maybe making another run lower. Dow's not. Dow's a machine. I think Trump's got his finger on the buy button again. He's getting a bit nervous. That could be a sell-off before elections. Now, let me get up. So you're in this one, Guru? Is it Guru? So I'm still watching EML at this stage, potentially buy. For me, it has to hold up $3. I would like to see it hold up $3. You can see that move up there. Okay, we've got the big sell-off and it's bounced around and we've got this market. Okay, it was bullish until we started to break down. So that's your corrective action. That's your leg up. We're going into correction. So do we come out of correction and resolve to the upside? I would prefer to see it hold. I mean, it doesn't have to. It can take out 3 and it can go and correct a bit lower. That's fine. We're seeing that volume as we're coming down, its volume's easing off. So I think there's a few people happy to hold. By the looks of, if we start seeing that tick up in volume on a little rally, then we want to start to get organized and get ready. Okay, you can see it's been sold off, got down to this low. Okay, sold off again. So some good selling. That was the selling pressure. Selling pressure took us into the lows. Going to the oversold market, we took us to about $3, bounced. So the second wave that they tried to push it down and through $3, any sellers that wanting it through there, or this is just talking in theory, but sellers that wanted to push it through there ran out of steam when we got into sort of that oversold territory, but they couldn't get it through 3. So there were some buyers that were sitting there, happy to soak up any pressure, happy to buy it at 3, but they're not really ready to buy it up and chase it higher. They may be accumulating, who knows? But if we see this start to break up through these sort of inside levels, there's around, say, 340 or so, you can see, actually, let's just get down to, just make it a bit smaller. Yep. No, I don't want that. Right, so an EML, if we start to get through these inside levels, say 330, 340, and we're holding up at 3, that might squeeze, and it might, I would expect that could bring in some buyers, right? That might be excited. You've been watching it for a while, like when we've been watching this for quite a while. But the concern is that that's sort of the bigger trend. You don't want to buy it through 350 because, say you buy it through that high. For instance, this is the move. This is why I like to work off higher lows. I think it's a key thing in my trading. I think it's a key thing to help you understand who's in control. Because if you see that breakout, there's no reason why with this structure here, so we've got this level off the highs up here, and say it could take us to around 360, 65. Just mark that up, this one here. And then we've got this one here, resistance. Now, anyone that's not looking at the bigger picture and just looking at that break, we'll buy on the break, and they're happy just to, it's been chopping around here, between 3, we've got that, and we've got a breakthrough there. They buy, they got to stop just in here, for instance, or just above 3, and all of a sudden it stops short at this first level around 360, say, and then we come crashing down and it gets sold off quite hard. Okay, so that to me is not a setup because it's just popped out of the range. It doesn't mean anything to me. It doesn't mean the buyers or sellers in control, and it could be just a bit of a trap, and we pop up and then get sold off. What I'd rather see is that pop up through the level, and then I'd rather see something, if I can see some action like that, a couple of legs down, but it looks to get held up, then I'd be buying with that off a higher low. So to me, that, especially if you get that minor high low there, this is a key longer term high low because it's coming back to, say, maybe retesting that breakout zone. That's what I'd be looking for. I hope you can understand that, the difference between seeing some, so that's the zone there. Let's just draw that in red. That's the zone there. That's what I'm looking at. Okay, the difference between buying straight away on the break and not waiting for that extra confirmation or for that to play out, especially in this scenario. I mean, it might be different if you break up through 375, then potentially buy it with a stop down at 3. That could be fine. But it doesn't mean we can't come all the way back down and stop you out and then go. I always like to see the higher lows play out because I think that's a good confirmation that buyers are in control. Buyers are willing to jump in earlier. They're not waiting for it to get back down to 3 or even, within that zone again, not waiting for it to get back in here. They're happy just to, buy the first pullback and load up and it goes again. All right. So I hope that makes a bit of sense, but I'll be looking for that high low to play out because I think you've got this little minor high low here you can work off. which confirms this key high low. And it just confirms that buyers are starting to take control. And if they are, then you could be looking up towards 425 test and then all the way back up to 575, so these previous highs. All right, awesome. So we'll go into Iluka. And don't forget, with this here on the EML, we're just below the MAs, so we're below the averages. So you need to see that MA starting to flatten or lift. If they're starting to lift, that means the weighted numbers are on the buy side. ILU. See, this is looking quite good. Nice pick. It's a bit choppy, but you can see that the MAs are pointing up, holding. It's a bit stretched up here. So the biggest problem, we're coming into this high and we're stretched. I'd rather not see it stretched into the high. I'd rather see it just, maybe it consolidates here, can consolidate sideways, and you see some selling pressure coming in. And if we see this stochastics move lower, say to the 50, but price doesn't go with it, all that's telling me is that buyers are soaking up any sort of selling pressure, right? So thinking in terms of, say, the S&P, sorry, stochastics being a pressure gauge, the pressure of sellers come in, but it's not going anywhere on the downside, then it just means that buyers are happy. Buyers are happy to keep buying and buying. And sooner or later, the sellers recognize that, give up, and then you might see it start to take off and take out this high. But here, when we're stretched into these levels, I'd rather see, if we break straight through, I'd rather see it break through, see what happens on the first pullback if I'm going to get long. But either way, and look at the weekly too, that weekly has been quite choppy. And just glancing at that weekly, you're getting into a high here, we've got to sell off. High here, we've got to sell off. We're at a prime position to get another sell off. And come all the way back down and take out these lows at 6. Because we haven't, on the weekly, we haven't really held a high low in context of this move down. Not really in here, because that's negated as soon as we get a sell off down and through. So it's sort of respecting this, really broad channel on the downside. I'll look at that in a minute, Jason. Like a yo-yo, yeah, MSP, true. So let's just draw up what I'm talking about on Luca. So really, the bigger term structures is here. All right, we're just doing this. We're bouncing around. We popped back up. This dragged in some buyers at that break, and they turned around and got stopped back out. Well, they got stopped back out. They're still holding long. And we're sort of up at this prime zone. So it could be that we retest, we wash out 950, drag in a few more buyers, and turn around and get sold all the way back down to 550. I mean, who knows? That's an evil drop if you're going to get long up here and we drop down. So I'm not a big fan of that price action. I would rather, this could take a long time to play out. Actually, let's go back and draw that up again. Long time to play out, but I would rather see the pullback and say come back down to 750, a pullback, and then start to see buyers stepping in and get your higher low in terms of holding up off this $6 550 zone. Right, and then I think that could take us through these highs quite convincingly. I just think by looking at that, that sort of chop, it's really broad, and this move down is very slow and seems fairly controlled at this stage. I would rather see, we've got just above the MAs on the weekly too, so we're a bit extended on the weekly MAs, and if you look on the daily, we're getting a bit extended here. We're sitting on the MAs here, but we're getting a bit extended. There's not a lot of volume, a couple of spikes in volume, which you can see we didn't take price anywhere. So the fact that we're sitting on the MAs means there's buyers, but there's also sellers. The last few days you can see sellers coming in. We're not spiking and retreating. A spike and retreat is different. You see this kind of action, once we start kicking on, if it spikes, great, buyers are in control. As soon as it turns around and comes straight back down again, the buyers have disappeared. Whereas here, we've got the last 4 days, we're consolidating, potentially consolidating here. So it'll be interesting to see whether we just start to go lower and that weekly takes control, or we do get that spike up to 10. We get a spike up to 10, go back to our weekly. I'd like to see it through 10 or through 10, 10, 20, 20, 30. That would be great. It looks like we're starting to make a move on the upside. But I would then I'd be looking for a pullback, and you can look to the daily for a pullback, sit on the MAs and go again. All right. So yeah, it's interesting that that chart there. What else? What did I type that? Just checking Regis. So Regis is kicking on, having a good day today. We're taking a partial on that. We're still holding strong at 560. Just managed to stay in that on Friday. I think it's 560 stop, which is good. It's good to just stay in one rather than just get stopped out of one. But we'll see if they can kick on. It was interesting when gold was up one night, and I think it was Friday, we might have had XGD. So that's the gold sector. Yeah, Friday we had a sell-off into gold, into the sector, where gold was up the previous night. So gold was actually, hadn't really changed. It was still bullish, yet we had a bit of a sell-off into the weekend. I got a feeling that people were just happy to take some off the table into the weekend, and now they're sort of jumping straight back in again as gold's up at these highs. So we've got the sector itself is up 4.5%, so it's just powering on, isn't it? It's actually gold itself doing, I haven't got the price. No, I haven't got it up. Oh, there's a SPY getting heavy. I was sitting here, it's ready to blast off. So it's going to do one or two. It's going to come down through 5 at 59.89. It's going to go up through 60.13 by the end of the day, I reckon. You know, if we take out these highs at 60.606, we could be in for a good little rally into the close today. Anyway, let's get on to what we're just looking at. It's kicking on. MSB, let's have a look at that then. I've got it up. So that, interest in that one is not so much off the daily, because that's a savage sell-off there, but that sell-off was with the whole market. You know, the whole market was just in capitulation mode. So how much you can factor into that sell-off if there wasn't, you know, the ASX melting down at that stage. If the ASX wasn't melting down and everything was okay, maybe that sell-off could have been held up around 2, even a bit higher than 2. You know, just your stock standard sell-off like that, consolidate and go again, which it seems to have done. So it's got smashed down here and come straight back, roaring straight back again. So for me, that move, if you look at it that way, and we're holding it around 2, we should have held up at 2 rather than test all the way down to 1. And the way we bounce is very important. Okay, so that means that $2 levels, that $1 level is the line in the sand. The MAs are up, meaning the average is a buyer. You know, buyers are winning out. We rebounded really hard off that $1 level, and we've taken out this high. Okay, so there's a lot of things there saying, oh, hang on a second, the bulls are starting to make a move, and look at the volume that's come in since we got down to that low. You know, it's really good volume. Whereas prior, I'm going to the daily, you know, volume in here, volume in here, volume in here, into the low, started to get some volume, got some volume on the move back out of that low, some more volume when we extended in here, bit of a sell-off, found a low around 3, which is retesting these highs. And then what we've done is held this inside high-low. The MAs are still up, they're consolidating, so the market's going sideways. Now, looking at that, if we come off this high low and we break through 380, I'm expecting that to push to 425 or above. Retest these highs. Now, if it fails off the highs, okay, so be it. We've got maybe a small gain. We can lock away a small gain or something. But if it just charges through those highs, don't forget we've got this inside high low, but it's all within context of a key high low off 3. Right? So as long as we get a bit of volume coming in, and I think the way that the weekly charts come off its highs, so you get some selling pressure coming in, stochastics are starting to show that it's going to pick up, and that's off, you know, it's just bounced off these high lows at 325, thereabouts at 325 on the weekly. Does that make sense? So that's probably a bit too far. So you can see it's lifting off the MA. So to me, that's quite a strong sign. So if you're just marking up this weekly chart here, it looks fairly primed. You know, you've got this here starting to hold. You know, volume's not too crash hot, but it could easily pick up. Volume's coming off a bit, but if we start to lift and we get up through 380, I think that's going to drag in some volume. I would expect it to. Now, if it doesn't and the volume's still coming off, it might mean that it's going to stall up towards its 420 highs. But you can see it's the zone through here. It's basically, with this move down here, retest there, it's sort of trying to close that gap. Buyers were still strong, held up off the MAs, so there's MAs in the longer term are up. If we get a breakthrough here, that to me is like, it's a really nice, I like seeing that kind of pattern. You got the rally, a pullback, pop up. We call that an ICT. ICT meaning inside continuation off a higher low is a nice strong pattern. You can at least test the highs, or it's looking to break out. So to me, that continuation means that they're going to retest. If we do get that double top, because that's your first port of call where it's going to be a double top and we're going to fail there and we're going to start doing this. But if it gets through it, we get through that level, expect maybe a retest and continuation higher. But that to me, that overall action here, an inside continuation, type it out, think of it as ICT. So that's what we like to chat about. Inside continuation trade, meaning you've got the extension, you got your pullback, you got your corrective phase, it's come off a lower high, it's tried to go down and take out this low, buyers are stepping in at a higher level, and as soon as they take out this high, the bulls realize that, so the bears realize they're in the wrong side of the market and they have to bail, because there's going to be stops above there, you're coming off a higher level, as in buyers are supporting it, and you're really just looking for that continuation to highs, and that's pretty much what that pattern is there. Whoops. Does that make sense? Yeah, ABC. Yeah, there's so many different names for the same thing, isn't it? So people say for example, people saying Elliott Way is no good, but they're doing the same. There's so many of the same concepts that we talk about. We just use different technology, different terminology, sorry. So I wouldn't say anything's bad. ICT, yeah. It's easier to say, isn't it? ICT, ABC. So, yeah, that's what I'm looking at there. So if that breaks there and we get up and through, the first thing we're going to be worried about is that 420 mark. All right, so that puts us 40 cents up. And that way we can lock it in. If it starts to fail off there and you look down to your lower time frame charts and we start to show signs of failure, I can lock it to break even or a small gain. Now, if it gets through there, then okay, we're on. And it's going to be moving, you would expect to move to new highs. Taking out that 425, that opens up a move to 5, even above, back up to this zone at 6. So there's a lot of fat in the upside. All right, so is there anything else quickly before we call it a day here? Let's just look at the ASX. That's the ASX on a daily, sorry, a weekly. That doesn't look too crash hot. I haven't looked at that properly for a while. Just look at that. It probably looks a bit better when you drag it out a touch. That there. This is where I'd be a bit careful to load the boat on the long side in the ASX just at this stage. I mean, I know we're up. We seem to be struggling. I mean, we've been up the other day and we backed off, and the other day, I think before that, we down and rebounded and sold back off into the close again. That was cheers. You're very welcome. So the ASX here, if we just draw that up quickly to finish off, are we going to hold? So the few key indicators is showing that last time we stretched here, we're right up here. Now we're stretched, in the fact that we're getting overcooked on the upside and we're way down here, down at these levels here, which is not good sign. We've got a little, if I can draw that, let's not bother with that. We've got rejection sort of through that. No, it's not really there, is it? Let's just take that a tad higher, sort of through that level there. I've stuffed it again. There we go, say 61. Got through, rejected. We've gone again, failed off there before, and then we rejected it again on Friday. So if we start to break to the downside, sort of out of that flag, come down on, as a trade, I'll be definitely looking for a lower high off that. And by that I mean, so we've gone 1, 2 moves up. We come straight to the MAs on the weekly. I think it's a weekly chart. Am I looking at? Weekly chart. We've rejected 1, 2. through the level, come straight back off. So if we start to fail, I'd be looking for, we've gone up here, so we've got all this price action through here. We're bouncing around in here. I'll be looking for a break at that level, quite simply a break there, and I'll look for the first lower high and see if we can get a nice little lower high to sell into and see if we can get a bit of move onto the downside, because we're stretched. We're finding some selling pressure up here. We've had a couple of legs up. I don't know what we are in Fibonacci terms. We're probably about 50% of that move down. Be interesting to see. I don't know how I can work it. Anyway, that's essentially what I'll be looking for. And at the very minimum, you could be just moving down to 52. But if it's from 59, for example, 58, and you get a few hundred points up your sleeve on the downside, then yeah, that could really start the momentum on the downside. And don't forget, we did this in the GFC sell-off, rebound for a while. Basically, was it through 2008, and then no, when do we get smacked? Can't quite remember. Let's just see if we can see it. Where are we? Here. So you can see that initial sell-off, we had that bounce, and I think that was a 50% retracement of that off the 5,000 level. Everyone was seeing that was quite good. Mid 2008, and we got a sell-off from there. We got down to 27, down to 3,000 on the XJO. So yeah, if we start to see that again, we could fall short here. And if the bulls are starting to play out okay, if they're starting to support the market, but if we start to attack 44 and we've got that little lower high, this entry with small risk, there could be a big move on the downside, and it's worth the risk if you get a lower high playing out. It's worth the risk to see if we can get a bit of a run on the downside, because the US could be falling apart. Indexes potentially have gone a bit too hard on the upside. There's going to be a lot of longs stacked up to get squeezed out of the action. So we'll see how we go. Yeah. All right, guys. Sold too soon. I know, I saw that. So that was nice. I think you put this up a while ago, didn't you, Pete? Good on the weekly. I was actually watching this, just waiting for that entry, and I think I was getting a bit too finicky. You could have had a stop below 110, break at 135. I don't like that much risk on my trades, but I like to refine it a bit better, but it hasn't looked back. It's just kept on. All right, guys, thanks for joining me. We'll be back in on tomorrow at 9:40, just for that quick pre-market plan that we talk about. Let's see what happened overnight and chat about that, and where we're looking at the action for intraday action, potential setups. So we'll be talking about that at 9:40 tomorrow. Now, if you much appreciate if you can give us a like on the YouTube channel, and feel free to follow us. So all our information's on the website, www.tradesetup.com.au. Any questions, feel free to email me. And I think, Jason, I was talking to you, I missed your call the other day, so feel free to give me a call in a minute, mate, if you want. We can have a chat. So enjoy your day, guys, and we'll speak to you again tomorrow. See you later. Bye.